If you are on higher or additional tax rate and you pay into a pension, there's a good chance you're not getting all the tax relief you're entitled to. I remind that, for the tax year 2025 to 26, higher tax rate is when you earn over £50,270. Let's do a step back. What is pension tax relief? When you pay into a pension, the government gives you back a percentage of the income tax you pay, and this is called pension tax relief. If you are on a basic tax rate, which is 20%, and you pay into a pension, your pension provider automatically claims this relief for you. This is called tax relief at source. For example, if you pay £80 into your pension, the pension provider adds £20. You get £100 in your pension pot. But if you pay higher rate tax, 40%, or additional rate tax, 45%, you're entitled to more relief, and this is where many people miss out. Please note, do not get worried about the following calculations. It only gives you an idea how the system works. I will show you how to claim the extra pension tax relief in a very simple way. The following example is for tax relief at source, which is the common method for receiving tax benefits on pension contributions, where 20% basic rate tax relief is automatically added to your pension savings by the provider. Please double-check with your pension provider this is actually your method. Amelia earns £53,000 and pays £5,000 into her pension. Her provider automatically adds £1,000 in basic rate relief. Her income above the higher rate threshold, £50,270, is £2,730. She can claim back 20% extra relief on that portion, which is £546. That gives Amelia £1,000 basic rate relief, plus £546 higher rate relief. Total tax relief, £1,546. So £5,000 into her pension actually costs her £3,454. If Amelia earned £55,270 or more, she could claim the full 40% on the entire contribution, meaning £5,000 would cost just £3,000. How does workplace pension tax relief work? There are 3 different cases: relief at source, net pay arrangement, and salary sacrifice. Relief at source is the same as previously seen, where your employer deducts your pension contribution after tax and national insurance have been taken from your pay. Then your pension provider adds tax relief to your pension pot at the basic tax rate, irrespective of your total earnings. So, if you are on higher or additional tax rates, you have to claim the remaining tax relief. Net pay arrangement. This is when your pension contributions are taken before tax, and you get full tax pension relief immediately whether you are a basic, higher, or additional rate taxpayer. Salary sacrifice. This case is the same as the previous one and therefore no action is needed. Basically, in this case your pension contributions are entirely paid by your employer, and not subjected to income tax. This arrangement means you have agreed to reduce part of your salary in exchange for a pension contribution made by your employer. Now, let's see how to claim that extra tax relief back. Go to the pension relief form. Select the tax year. Click on Add New. The boxes, Regular Pension Contributions, and One-Off Pension Contributions Paid, are for relief at source system. As we saw earlier, this is when your provider claim basic rate tax relief of 20%. In the first box put the total amount of your personal contributions paid to the scheme, plus the basic rate tax relief. While on the second box, Put any one-off payments you made in the selected tax year. Basically, one-off payments are payments made in the tax year that you do not intend to repeat. So, for example, if Emma paid £700 as regular contributions for the tax year 2025 to 26 into her pension scheme, she puts £875 in the first box, which is £700 divided by 80 and multiplied by 100. Same calculation applies for the box one-off pension contributions paid. If you made one-off payments, the other 3 boxes are for personal contributions, with full relief still to claim. In particular, retirement annuity payments is when your retirement annuity contract provider does not use the relief at source scheme. That is, as said earlier, they do not claim the basic rate, 20%, tax relief on your behalf. So, in this box, put the total personal contributions you paid. Payment to employers scheme no tax relief is when an employer takes your personal contributions from your pay, and no tax relief was given. So, in this box, put the total unrelieved amount you paid. Finally, you may get tax relief if you're eligible for migrant member relief, transitional corresponding relief, or relief under a double taxation agreement. Put the amount that qualifies for tax relief in the 5th box, overseas pension scheme contributions. Click on Submit and your pension tax relief is complete. You can edit these amounts or you can delete them. What if I missed a year? No worries. You can backdate pension contributions for up to the last 4 tax years. Claiming tax relief on pension contributions for previous years works in the same way as claiming for this tax year. So in the pension relief form, select the previous tax year and follow the same steps I showed you for the current tax year. Comment more, and I'll send you a link to try this for free for a month.